Hello guys, welcome back to another lovely trading video. Before this we did upload a video on Etsy if you want to check that out. Otherwise we are now on FHTX, which is one of the leading gappers on the small cap side of things. So to get straight into it, we're going to just give some price targets, see where we expect it to go in the coming days. So starting off, all we do is go onto a clean daily chart. We can just see, is there any gaps? We always like to look at gaps. We don't use them as entries, but we do like to use them as price targets just because we do tend to see bounces if they're very clear gaps. But looking at the chart, we don't really have any gaps apart from the one created today at around $12. Still to the downside, that is kind of the bottom. If you were looking to short it all the way down, that's definitely where I would be looking to close out the short position. Now, at a very extreme that is. Now we'll get onto the normal price target. So all we really need to do is just place support and resistance lines on all of these deviations, because these are where we expect to see buying and or selling pressure coming into each of these levels. So for this, again, we'll kind of go onto, I guess, a 5-day, 5-minute or so, see how these levels react. And you can see intraday, you did get some significance around these levels. You got your bounce, came back, and then the intraday of after hours was that 2080, which will be, or 2070, which is the third deviation on the daily. Now, as it has hit the third deviation on the daily, this could be a clear sign that this was the end of the move, because you don't tend to see stocks break and hold through the third deviation. Because if you know standard deviation, you know 99.7% of data is within the green deviations, which is the third deviation. So you expect 99.7% of data to all be within this green area. So seeing that, usually when you see stocks, even on small caps, come into these levels, that usually tends to be the end of the move. However, we can see it's coming to the 1980 level, fell straight through that, retested, confirmed that level and pushed further down, and now it's creating support on the $18 level, which is the deviation, the third deviation on the 4 hour. So coming into tomorrow, the real thing we would be looking for is either a close kind of below this 1640 is what we would look for if we were looking to be more short bias. The reason for that is once we close below this level, we've closed through multiple levels of support. So if we can break through this, retest, then most likely we will continue down all the way back to $12. And the reason I say that is that's when we start getting larger gaps between our support levels. So you'll see here, obviously it's 18 to 17 to 1630. They're not massive jumps. However, we go from 1640 all the way down to 1460. So here, this is quite that big sell-off, and that's why this is where we would start being short bias, because then we have quite a long target, and then you can also be placing a stop above that kind of 1710 level. Now, if we think it's going to continue upwards, all we would really be waiting for is a break back above this $20.80 mark. And we would want that pullback. So we break above it, pull back, retest this 2080, and then if buying pressure comes in, then we have an overall target of 2430. Once we come into 2430, that's where I would start being short biased on the stock, kind of no matter what. So I would be looking to be short biased at least to the 2080. If the stock's going to continue up, I mean, there's not much we can do about that, but we can predict that coming into $24.30, we will most likely get a pullback all the way down to $20 or $21. But if the stock, if it is one of these parabolic movers and it will just continue higher, then this $24 level, again, we would expect that pullback come to the 21, and then it would probably break through. It probably won't do it on the first initial move. So overall, again, we can never really predict which way it's going to go. If anything, I'll be more short biased just because we've come into the third deviation. But until markets open, there's not really much point in making any predictions. So it's more just using these levels whatever way the market opens. Again, if you're looking to be short bias, I'd be waiting for kind of a close below that kind of 1640. If you're being long bias, a break of this 2080 again, come back, retest, and if buying pressure comes in that time, then it will make sense to be most likely be getting long. And then overall, once we come into 2430, I'll kind of just be short from then on. But obviously short at your own risk, because on these stocks, whenever a stock comes out this far, if it's already able to push to that fourth deviation, there's no reason it can't push higher. It doesn't make sense in a statistical matter, but you do get some stocks that are the exception if just so much hype comes into them. So that's always a thing to be a bit wary of. Is that's why you control your risk. You short kind of to the 21 if that's what you're looking to do, and then if it retests at 24.30, it's most likely going to break and continue up, and it will just be a parabolic mover, and one we won't look to be touching from then on. So I hope that gives you some good breakdown and insight into the stock. Hope to see you in the next one, and that's it. Peace.